Hi traders, welcome to the video. Please pause the video and make sure you understand the disclaimer before proceeding. This open on a 5-minute chart. What I'm going to do is I'm going to jump out very quickly and we'll come back to this. This is important. We'll go out to the weekly and I want to show you what I'm looking at and a possible trade opportunity. So if we look left here where the current price is trading, we can see that, we've got this high here, we've got this candle low. We can look further back. This is candle low over here. This is a big level on the weekly. Okay, so the market has reacted off this level numerous times. So we'll just mark that up as a weekly. I think that's not right. Level week, there we go. Resistance, weekly. All right, now we can have a look at this quickly on the daily, and this will make sense. So we've had a few goes at it. I haven't been able to crack this. There's a couple of things about this on the daily that we need to be mindful of. See this thin candle here? Look left, look right. We've got this price gap above on the daily time frame. So this is definitely a point of interest. At some stage, this is going to look to fill this gap. And have a look at this candle here. Right, so these two levels will get filled at some stage. Have a look back. See, we've got the same thing here. See how it trades back up? It took a while, so that could take some time, but it's always important to know that these are there and have them marked on the chart so that you're aware of these levels. See, back here, this thin candle, trades back up, looks to rebalance. There it goes, right? Everywhere you look, you'll find the market will look to rebalance at some stage, and this will happen on every time frame. So we've got the daily looking left. We've got this candle high here. We could pull that through. So we've got this nested daily and weekly, level daily. Now this is my top down. This is how I approach this. So that's the higher time frame. We can go down to the 4-hour now. I'm happy to work on this time frame. Most of my trading is done on the 4-hour time frame, and I'll trade around these levels here. See this current balance area? We'll look left, and we've got this balance through here. So I'm going to pull that through, key level, distribution level, prior to this strong bearish sell-off here. So we'll just mark that up as a 4H. These are the levels that I work off, these 4-hour levels mainly, and sometimes, quite often actually, the 4-hour, if it's nested with a daily, that's generally quite a good level to work from. So we've got this 4-hour resistance up here, and we've also got this accumulation zone under here. Okay, so it's the range between here and here that I'm interested in. So we'll just mark that one up, call it, that'll do, 4H. The other thing that we have a look at this green candle, thin candle. Look at the candle high on the left, candle low on the right. This imbalance. So, it's a screaming a potential short opportunity. Can it trade north and take us out? Of course it can. It's it's a matter of probability and possibility. This is 4H. And I think there's the probability factor is on my side that we get an opportunity, a day trade short out of this. And again, can that trade north and blow my idea out of the water? Yes, of course. But I think I've got about an 80-20 possibility. I'm building an argument here, and I think the argument is strong, given that this is a big resistance level. We've got this price gap under, this imbalance. Market's going to need to rebalance. If smart money is looking to, look for these higher levels up here, they're going to need liquidity. So I always look at the market from a standpoint of where is there resting liquidity that they can grab, where is there an imbalance that needs to be resolved, and immediately there's your imbalance and liquidity. Well, we've got a ton of retail traders in here buying long. They're all jumping up around here. We've got stop losses resting all through this range, all through under here, through this, right through here, stop losses galore. So that is a target for smart money. That's ripe for the picking, in my opinion. So this is why I'm thinking more than anything that we'll see a retrace. Now what we do have here, look at this, right? We've got this lower low, it's picked up sell-side liquidity. This looks like it could possibly be shaping up for a trend reversal. Possibly. It's giving us a bit of an indication. It may or may not. The stock markets are a bit precarious at the moment. This could tank, but we've got this higher low, we've got a bullish break of structure, long thin candle here, overextended. Let's grab a Fibonacci and let's just pull it from the low to the high. What I get is, see my orange zone here, 23.6 to 38.2. Look, if this has got strong bullish momentum, I'm going for a counter trend given that we got this bullish break of structure. And my target will be just somewhere in here. Above this high, that looks okay. 38.2 fib level, there's a target. And then it's trading down into this price gap. It attacks liquidity. I'm good with that. So that's what I'm thinking. Let's go down to, by the way guys, if you haven't already, click the links below. Check out the link that says we trade your Forex account. I think you might find that is very interesting. And then the other one is it's a link to join our free Telegram group. So now we go down to the lower time frame and we can see this. We've got this purple thing here. This is the imbalance that I mentioned on the 4H, and then we've got this accumulation zone under here. So there's the levels. You got the orange, the fib level, blah blah blah, something like that. So see how this fib, I'll just do this fib level here coincides with this little zone over here. Well, there's target 1 right there at the high of this little range. Target 2, just look left. See, we've got these highs over here, something like that. And that's how I find my targets. Now, what I want to see here before I get involved with this is we're trading into the London Open, right? So let's just mark that up. I'm looking at Sydney time here, Sydney, Australia, 1900. We're heading into the session open time. So we just mark that up on our screen because the market will react around here. And what we're getting at the moment is this pre-London Open Asian session range, where this balance area, as in there's a fairly even number of buying and selling activity, balance of buys and sells, if you want to put it that way. This is going to crack. The setup that I'm waiting for, given that I'm sitting in front of the chart, is going to be something like this. I want to see this break the low of this range before anything. Let's just do that. We'll pull it through here. So I want to see, and why I'm saying that is, when you get these ranges, we get a build-up of liquidity, stop losses above and below the range. It's ripe for the picking, and we've got liquidity above. Here it is. So notice this zone, this white-coloured rectangle here. This is our 4-hour distribution level from previously, and we've got this daily and weekly level here. So this is a big level. The play that I want to see, I don't want to buy here. It's overextended. If anything, I'm looking to short it. But what I want to see is this. I want to see this crack this low, and this will entice short traders in. And what happens when short traders get involved? This doubles up. The liquidity builds above it. Now, smart money's got a lot of capital to move, and they don't just jump in here and go like, right, let's just sell. In a lot of cases, they're going to entice short traders in so that they build this liquidity above it, and then we see the market, however it works, it trades up, and then we get the trend setting up, and there's our thing. This is what I want to see happen. I want to see sell side liquidity get taken, and then I want to see buy side liquidity get taken out. Now we've got the Asian session close, and that occurs Sydney time 20. So we'll just go to 20:00. There's the Asian close. Let's go down to a 5-minute chart. Spreads this out a little bit, and then we've got the New York Open. So I'm looking for this play, and you're going to see this quite often. This is going to happen time and time again. It's Sydney 19, it's 20, and then we got the US Open over here somewhere. Have these marked up, guys. Really important. So let's just grab that. The US Open right there. And that happens at my 24. All right, lower time frame, even a 3-minute chart. I want to see this low taken out, and it's still kind of messing around up here. This is the play that I want to see, and I would like to see it happen around the London Open. Then the Asia close, and then you get, and then there's our trade. That's the sort of play that I want to see. My entry will be lower high, lower low, lower high. That could creep up a little bit higher to, take out imbalances above. Something like that. I don't know, I'm making a mess of this chart now, but this would be an ideal entry. You've got to wait for that to start forming, this trend to kick off. So that's might take a bit long-winded, guys, but you know, that's if you're scalping or day trading the US 30, that would be one approach. And then the other approach would be, if you're not in front of the chart and you want to take a stab at it, well, here's an idea. Let's just clear the decks quickly. Short, go in with a market sell, and we'll go in with 0.2. You know, I want to go out for the night. I don't want to sit around watching this all day. And then I'm going to set up a another one up around in here, 0.4. This is how I generally set my trades up. Stop loss above. Can it get taken out? Of course it can, but that's not a bad setup. More often than not that these will work out really well. So stop loss above. You know, I'm prepared to take this risk. I'm not in front of my chart. Okay, looking for first target. We've got this little range down in here. There you go. At the high of this price gap, that's not a bad spot. There's target 1. And I'll take most of my position off. So this can be set up with pending orders, set and forget, more or less. So that's the other way to approach it. And then set up another target further below. But go for broke with this. You know, if you get a chance to trail your stop loss, sure. But anyway, that's my take on the US 30, guys. I hope you have a great day. Safe trading, and we'll see you in the next one.